Finance, Ms. Crawford and Ms. Sacco. And if you could both state your name for the record and then proceed.
Off to that start. Good morning, everyone, and thank you very much for taking time to meet with us and discuss our budget. I'm Nancy Crawford, Director of Finance. With me is Deanna Sacco, Deputy Director. If I can, I've got just a couple of short comments before we open up to any questions you folks might have, but I would really like to start by introducing our division managers who are here, because they are, they cover a wide variety of divisions, and they are what makes the finance department. First, I'd like to recognize Nancy Kelly, our budget administrator, who has left the building. Excuse me. But Ted Schrey, budget analyst, is here covering, and between the two of them, our two-person.
Oh, good. There's Nancy.
And there's Nancy. It's perfect timing. But, they put in many, many hours, and I know you all appreciate that. They've met with the leadership and staff of all of the departments in the county, done a great deal of analysis, and they are responsible for, helping with developing the budget and producing all the documents that are available to all of us to use here today and in looking at the budget. Sitting right back here behind me, we have Kay Oshiro, our controller, I think most of you know, and Jeff Dansdill, our purchasing agent, helping us keep us right in purchasing. Mike Okamoto is right beside him as treasurer. He's made a tremendous difference for the county as a whole in how we process our debt in particular, but other investments and other activities as well. And Scott Knowles, our risk manager, who covers a broad variety of things, including being our representative to all of civil defense actions and other emergency response sort of things. But his undoubtedly has made a difference in our budgets over the time that he has been here, with amazing in his ability to negotiate insurance rates for across a lot of the departments, all the areas where we have insurance. It's just a complete turnaround from what we had before he was here. And now switching over my other shoulder, Naomi Odell is our vehicle registration and licensing administrator, covering the very difficult job of probably the highest traffic offices in the county, and working very hard to improve service there. And I think we have seen changes in service under her leadership. And we have Stan Sitko, our real property tax administrator. And I know you all know Stan and have perhaps talked with him some in the past. He's helped us, advise us, and of course, the mayor referred to him today. Ken Van Bergen, I know all of you know well. He is unable to be with us today, but he's made a tremendous contribution in his area of property management, which was as a new division, he fully embraced the responsibilities there and has, as the mayor said, been a real go-getter. So my thanks, Deanna's thanks to these folks who support us and I think make the finance department really a successful department working hard to serve the public. Just a mention about the budget in general, which is that in this year, as in the other years, the message really to the departments was the same, which is to maintain their status quo budget with the exception of costs beyond their control. And there'd be utilities, or in this case, obviously, we had salary and wage increases that impact their budgets. And as you look through any of these departments, you just see, across the board, there's a component that is the salary and wage in departments. And in many cases, that may exceed their overall increase in their budget. So as I said, the primary increase, salary and wages. The one exception I'll just mention is in the fire department. As you look at their budget, because their budget is still at the state legislature being finalized and isn't really in effect until all of the government agencies or organizations have passed that. It's moving forward quickly, and we hope to have it passed to give us, that information to go ahead. But we have put the raise information, all the raises, in a provision account, which you'll see down in our miscellaneous accounts, and we can talk about that if you like. But so the firefighter raises, other raises in the fire department are in there. If they have unit 3 people and 13 people and other bargaining units that are represented in the budget numbers in front of you. But I just don't want you to be confused as you look there that theirs are located in a different section. I think that pretty well covers our budget process and the whole department, the whole county. So then just to talk about the finance department for a moment, our budget for next year is $11.6 million. And that's an increase of a little over about $517,000 over last year. The salary and wages increase is $635,000. So you can see that actually we had a decrease of about $117,000 in non-S&W costs in our department. And just highlight a couple of the larger changes that might stand out to you. In real property tax, you will see a decrease in their miscellaneous contract services. And that's because the majority of the cost related to upgrading our IAS tax valuation system and the new Marshall and Swift cost data systems were incurred in the current year. We budgeted for those in this year. That's the majority upfront cost. And then we have next year's budget does contain additional, ongoing costs for those services. But those are two major upgrades we're making in real property tax, but primarily incurred in the current year, so that budget is cut. We have an increase in our commercial driver license section, miscellaneous contract services.
Excuse me.
I'm sorry.
Do you want to ask her a question to explain?
Nancy, on the last thing you just talked about, the upgrades and the software and everything, could you talk a little bit more about that, explain it a little bit more?
Absolutely. I'll explain some more, but what we may want to do is save, if you want a detailed explanation, we might wait until I just kind of finish this little overview and then go into a little more detail with and have additional assistance from Stan on the specifics. That is, I will just mention that upgrading, not that it wasn't on our radar anyway, but upgrading the IAS was one of the recommendations that the IAAO report brought up. And I believe Marshall and, I don't know if specifically Marshall and Swiss, but some costing information was also included in that we're addressing.
IAS, the acronym stand for?
International.
No, integrated.
I'm sorry, IAS.
IAS, yeah, okay.
Yeah, I was going with IAAO. Too many acronyms.
Yeah.
I apologize. Integrated Assessment System. Integrated Assessment System is a product. That's our software product that they use primarily for all of the valuation accounting. And believe me, I'll let Stan give you a much better explanation of that. I just wanted to mention also, as a highlight, in the commercial driver license section, there is an increase in their contracting section. That's for services to pave and fence a new CDL drive testing site. That is a state-funded program, and all of that is funded by the state. So it's balanced in the budget. We have revenue accounts that offset our expenditures for commercial driver license and as well as PMVI. So that's it. Just to mention the other thing that I think we'll be talking about while we're here, we're responsible for the miscellaneous charges section in the general fund. That's like transfers to other funds, debt service, the fringe benefits for our employees, and some other miscellaneous charges. And the majority of changes there are attributable to our most recent employee wage increases and also some mandated increases to certain benefit categories such as our ERS that goes up by a certain percentage per state law. So at that point, that's my little summary, and we are more than happy to address any questions that you might have.
Okay. Council Chair Jay Yoshimoto.
Thank you, Madam Chair. Morning, Nancy, Diana.
Good morning.
I did have a question that was brought to my attention about the motor vehicle licensing department. And, Nancy, I guess, in your opening remarks, you made a description, I guess, of the challenging nature of that department. Could you, I guess, inform us about whether there's going to be any changes in staff or additional staff? Because I'll cut to the chase. Basically, it seems like it takes a long time to get your license, whether it's because, they're doing state IDs now or things of that nature. So the question to me, the question that was posed to me was, is there anything we can do to add additional staff to help process people faster?
Thank you. I think, we've had challenges there with, first we went with new requirements for driver's license, and we pretty well got control of that, and then state IDs moved over as well. But we were provided positions from the state to assist with state IDs. That doesn't mean when we got, and that was last year, but there is a certain learning curve that comes when you have new staff, and we occasionally have turnovers and also some new staff. Our feeling has been, and I don't want to minimize people's weight and experience, we do have survey forms, and people fill those out, sometimes while they're waiting in line, and other times just after the fact. There's been a real shift in the comments on those survey forms, and that's part of the way I can judge improvement. Also, that's sort of anecdotal, but coming from our customers. We have implemented a number of different efficiencies in West Hawaii. We finally were able to get in our express window on the motor vehicle side, which motor vehicle tends to get a real surge at certain times of the month, the end and the very beginning of the new month when people hit their deadlines. And so one of our things has always been to try to staff for normal, and if you are one of the people who waits until the last day, you may have to expect to wait a while. I know that we were sort of, I think we were used to not having to wait long at all here. Right. And the wait seems pretty long at some times. We're still working, and I can ask Naomi to address some of the other ways that we're working on improving efficiency, including looking at software for scheduling tests, and have considered scheduling appointments for a lot of things. We want to keep the flow moving and to handle as many people as quickly as we can. To that also, we have hybrid positions which were created really when this division was first created. Driver license came over from the police department, and we integrated these together, and our new clerical people who come in as hybrids. The idea being that as they're trained on both sides, and they can move depending on the office you're in. For instance, if in Pahoa, they can move seamlessly. I mean, they just take whoever comes to the window because they're trained to handle both. Mm-hmm. That's very nice. In Kona, it's not quite as seamless because the services are currently divided, but these people can move. They're trained and they can move. And as we continue to train our staff, I think that will help accommodate when we have certain rushes.
So hybrid, you mean like cross-trained, so they can do multiple?
That's right. The
yeah, that's good.
hybrids are cross-trained to do all the jobs. And that's ultimately, that's what we hope all those people will be doing.
Yeah, both the vehicle registration. So at the end of the month, when they're the busiest, the clerks can go on that side. And during the month, when driver's license lines gets long, then they'll be able to work there as well.
Okay, yeah, because that was the comment. It was the licensing department, and one of the suggestions was that, well, they should go to Pahoa or something because the lines are not as long. And I don't know if that to be true or not. That's
Pahoa is also very busy.
yeah, so depending who you ask, I
Yeah,
guess, right, or when you go. But that was the concern, is if what can we do either to add more positions. But if you're having people cross-train, I think that's an excellent idea. And if scheduling for appointments, I think is also an option too.
And we've added the greeter in the front as well. So when you first get there, they'll help you with your documents to make sure you have everything. So we don't want people waiting 2 hours just to be turned away because they don't have the right documentation. So I think that's also helped to speed it up as well.
Okay. Well, it sounds like you're on the situation. So.
Right, and we will evaluate as we get these hybrids trained and our make sure all our positions are filled with well-trained people. If volume is continuing to increase, vehicle registration volume is increasing, we're keeping an eye on that. We'll certainly take a look whether or not we think we perhaps need some additional staffing in the future.
Okay, thank you.
Okay. Does anybody? Okay. Councilmember Ford?
Thank you. Okay, let's start with Gatsby.
Okay. That's
Either one of you, doesn't matter to me. Explain where we are. They're putting in 4.2, right? Million
correct.
this year.
That's correct.
And how far behind?
Just to kind of back up a little bit, because I think there was some confusion even at the Finance Committee meeting
Yes,
earlier
there
in the
was.
week. And so GASB itself is the Governmental Accounting Standard Board that creates the accounting standards we have to follow and prepare our CAFR by, which is our annual audited financial statements. And that you heard about on Monday. GASB Statement 45 is on post-employment benefits. And that was a new statement that was effective in 2008, yes.
If anyone has your black binder, it's in the miscellaneous section on page 180. I'm sorry.
No, that's good. Yes, because we all want to be on the same page. And so GASB Statement 45 really is a requirement to bring to the forefront the liabilities that are out there for governments, because we have made these retirement plans that include post-employment, like medical coverage, for example, like we have in the state of Hawaii. So when our employees retire, we do provide them with medical coverage. The accounting standard says we have to report that liability. It doesn't say we have to make payment on that. Is it good to make payments towards it? Definitely. And in the first 4 years when the statement was effective, we were able to make the payments. There are two different portions of GASB 45, and we have an actuary that actually works for the state, but they do our actuarial study as well. And they come up with what's required by the GASB statement with an annual required contribution. It's called the ARC. That consists of two components. One is the pay-as-you-go. Each year, no matter what, we pay the retirees medical benefits. And this year, it's $16 million.
Okay, we're on
in the coming year, in fiscal
which
year 15.
page and which
Yep,
line, so they can start learning how to do this?
It is on, sorry, that's the date, page 180 also. And so the first account, 5902.09, post-employment benefits, is the one Mrs. Ford's referring to, the 4.2 million. And then the next line, 5902.15, is health benefits, which is 28.2 million. That includes the active employees as well as the retirees.
And that's the one that must be paid, right?
Right, we pay all of the medical premiums each year, our portion for our actives, as well as the entire premium for our retirees. In our case, it's actually, 16.7 million of that 28.2 is for retirees. So the first 4 years, we actually paid in 61.6 million, which EUTF is holding on our behalf. It has to be at an independent, separate trust. So EUTF has that money, as well as from the other counties, and now finally the state.
Okay, the 61 million, right? And you say that's in a separate account. That's separate from all the other counties and the state, correct?
Yes, we have our own named bucket of money at EUTF.
And they
It has-
can't go after it.
Right.
So that's
And
really
they
important.
passed state legislation to clarify that. So that's, yes, it's our money. And it has also earned us roughly 5.5 million over the last few years as well. So that money we put in has been growing. So for this, then 2 years, we took a break. We tried to pay it as long as we could. Then we took a break. In the CAFR, you will see that there is a liability of 38.2 million that we should have paid in those 2 years, but didn't. For the coming year, I cannot tell you the exact amount because the actuarial study is going on right now. They are actually working on it. But I can tell you that for fiscal year 13, which is the last information we have, our ARC, or annual required contribution, was 29.5 million. So if it were to stay the same for fiscal year 15, we are already budgeting 16.7 million in our budget. So that would leave us 12 I'd used the wrong number earlier. 12.8 million to put in this post-employment benefit account, of which we are budgeting 4.2 million. So we are 8.6 million short, basically, I think is your question.
And the 32.8 million for the, that we're originally short, is that the fiscal year 13 plus the guesstimate on 14?
That's what's in the CAFR, because we
Okay,
don't
the
have the 14 actuarial study yet.
Okay.
Yeah. But we
So-
have budgeted to pay 3.15
So if we're
million.
8.6 million short, that would be added to the 38.2 million?
Roughly, yes.
Okay, roughly. All right. The reason I kind of harp on this each year on the budget cycle is because somebody's going to inherit this problem, because it's going to continue to go until our tax base increases sufficiently that we put in the whole amount, or we put in the whole amount plus some portion of the arrears, or the state legislature passes a law and says, you must do X minimum. And so as you go forward in time, this deficit just keeps getting bigger, and that's a problem for us.
And we actually, we were one of the leaders in making these contributions in the state of Hawaii. We did make the first full 4 years of payments. The state is finally getting on board and I believe trying to make payments. So Kauai is one of the counties that has managed to make, all of their payments for each of the years. The state legislature has actually already passed a law kind of gradually implementing required payments each year. There's some difference in interpretation of the law, but in the first year we would be required to pay 20% of the annual required contribution, which we are budgeting for. In addition, that's effective in fiscal year 15. But in addition, we also have budgeted in fiscal year 14, and we haven't made that payment yet. A little over $3 million. So.
Okay. All right. Let me go back. I know the rest of that stuff, so let me go back to real property taxes and the IAS. So let's start with the IAS and get a good explanation of that and how it's helping us. And I'd like to see where it is in this budget, the line item that it's on. And then additionally, I want to know of the 17, you guys can all think about this if one of you is going to deal with it. We have not collected $17.2 million in property taxes. And I have to wonder out loud, since I already brought up my property taxes, if we were able to collect that, would we have needed to raise property taxes last year? Now, I realize you never get 100%, because there's always somebody not paying on time, and they've got the 3-year thing. So let's start with the IAS, and then let's go to the 17.2, and I would like to understand a breakdown of that amount of money. Stan, go ahead and introduce yourself.
Stan Sitko, Real Property Tax Administrator. To answer your question, the IAS is the basic software that we use to store all the data that we collect and to value the properties, to apply the exemptions, and it goes as far as calculates the taxes, integrates in our cashiering system, and puts everything together, which is why it's called the Integrated Assessment System, since we go everything from assessment to collections. One of the recommendations of the International Association of Assessing Officers, or IAAO, was that we upgrade to what's called IAS World, which fundamentally is the same database but allows us, among other things, to streamline our screens, to start independent task-related flows in the system. It also allows us to go on the cloud, to be honest, and that reduces the necessity for having database management staff here. The other thing is that it allows us to integrate other programs that are available on the cloud, such as pictometry, into what we're utilizing there on one screen. Right now, we have to go out of IAS, go then into another little program, take a look at what we're doing there. This allows us to integrate all sorts of items because we're on the cloud or on an internet front end. Fundamentally, the database behind it is the same as what we have.
And Stan, the pictometry, is that how you say it, pictometry?
Pictometry.
Okay. Allows you to look at a particular parcel of land and see if there are structures there?
Among other things.
Okay.
And
The reason I'm questioning this, I wanted you to explain it, is not just for the council, but the public calls me from various districts and says, you know, my neighbor is building X and he doesn't have a permit and he's not going to be taxed, and et cetera, et cetera. And this would helps your department, correct?
This helps our department right now. Right now, we're actually manually doing it, and as far as I found out just from a conference that my assistant administrator and our GIS analyst went to a week and a half ago, we're pretty much advanced as far as the other counties in actually using it, but we're using it manually. Let me kind of back up, because we're first talking about IS World. This allows us then to integrate other systems, and one of the other questions and line items that I have to explain here is the Marshall and Swift cost conversion. Marshall and Swift is the premier costing manual. Up to now, what we have to do is we get engineering studies, we then calibrate them against what the market is in our county, and that's how we come up with our cost tables, and that's how we come up with our assessments. Marshall and Swift, as I mentioned, is the premier cost data provider. All 4 counties decided to go into this, and what's going to happen probably for the 15-16 year, because you have to have one thing before you get to the other thing, is that we can then cost our buildings, send them off, they'll be into the cloud, they'll come back, they'll give us a value, they will defend the value also, which is another benefit. All of the counties are participating in this, and it is a 3-year project. I've actually already gotten manuals on the structural manuals for this costing system, although we still have to introduce it and train our staff on it. That's one of the advantages that we can do. The other advantage is we can integrate pictometry, as you mentioned. Now, Marshall and Swift and the initial jump into IS World, I had budgeted in this year's budget the current year. Next year, I'm including an upgrade for hopefully cashiering system and for pictometry. Now, what can that do? We have at least 2 overflights now of the county. What it can do, among other things, is show differences in structure shape. Not just that there is a structure there. However, we do have some issues that we're working on. Among them, you have kind of a drift on the parcel lines when you look down. Okay. Another thing is not all of our island is overflown because we happen to have several mountains that stick up pretty high.
Nobody wants to live in that.
Well, we hope not. However, what it's going to do, and we're looking into, is integrating this a little bit further. Like I said, right now, manually, we have one person looking there. Are they doing ag here? Is there a building here? Or is what's going on one by one? This software we're looking at, or this service, will allow us to see actual differences between one overflight and the other. It will actually allow us to do oblique. In other words, we can look almost at an angle at the structure and pretty much get a very good external picture of what's going on there. Obviously, since we have over 150,000 parcels, we want to mechanize this, or make it utilize software to give us where those differences are.
Because of the concerns that keep getting raised to me about unpermitted structures and these people are apparently not being taxed, which I don't know if that's correct. I'm not.
We tax whatever we find.
If we find it, we'll tax it.
I understand. The pictometry, is it something that happens automatically that, say, on my parcel, if I built another home on my parcel, another house, it would catch it, say, oops, there's been a big change, and alert you to look at my property and say there's a change, and you could figure out what's going on?
That is the future hope. Okay, right now, like I said, we have 2 overflights. We're going to catch changes between these 2 overflights. Obviously, things that were not changed from before are not going to be caught. However, there is another aspect to it, is some of the software, and once again, I'm looking into it, and we're also have to integrate this with the Marshall and Swift, because they are going to look at the sketch, compare that sketch to what they photograph. Okay. Now, then we're going to see, we don't have all this outline on this particular parcel, and that is flagged, yes. A second house would be easy. It's going to take time to integrate.
You're looking at how many years, maybe 3, 4, 5?
Not even that long, but 3, I'd say, is a safe.
Okay, all right. Before I go on, if somebody else wants to ask questions on IAS, I don't mind yielding.
I don't need that IAS.
Okay. Not any.
Okay.
Yes.
The $17.2 million that we have not yet collected in property taxes, how much of that is, well, it's all below 3 years in arrears, right? Because otherwise we go into a foreclosure mode.
It's not all lower than 3 years in arrears, because some of the properties are subject to litigation, bankruptcy, or other issues. So we do have some older properties out there. As well, we also have, I don't remember the right term, Stan, sometimes we refer to them as lava land, but also very low value properties that it doesn't make sense to foreclose on them, because we wouldn't be able to recover the taxes or our costs related to it. So there are some properties that we were just not able to foreclose on.
My understanding was less than 3% of the parcels are either vacant or a lava land.
On those low value parcels?
Yes.
Yeah,
Less than
right, it's not
3%
a
of
lot.
this.
I'm just saying, right, there's a portion of it, though, that we just will never foreclose on. And
Right.
so we can't say they're all less than 3 years in arrears.
Right.
However, you know, we do send reminder notices to help people remember to pay, because we do only bill twice a year. So for people who are outstanding, we send reminder notices. In addition, this year's tax sale, because we've hit the 3 years on some of these parcels, is going to be, we had one tax sale already, and the next one will be larger. We're starting with a larger number of parcels to collect on.
About how much, I want the council and the public to know, to understand where this $17.2 million is. You know, like what percentages are houses that could be foreclosed on or versus vacant land? And I'm excluding lava land from the vacant land, because we're not going to do it anyway. So I'm concerned that it's this amount of money.
Right.
To me, the 17 million is a huge amount of money. And so if you could explain how it's sort of brought, just guesstimates. I don't want anything
Stan
accurate.
can give you more details, but I'll also remind the council that, you know, in good times, our receivables are very low, and when the economy is poor is when they go up. And that's why this upcoming tax sale, we're starting with a larger number of parcels. But the 17.2 million also includes the properties with taxes that are within the last 2 years and are not eligible for foreclosure.
Right.
So I just wanted to clarify that.
What percentage? One third,
that
2/3?
I don't even know if Stan knows. It might be something we have to get to.
While Stan is looking for that, the reason I'm asking this is that either last year or the year before, I proposed legislation to drop it from 3 years to 2 years and get those, some people just don't want to pay timely.
Right.
And so, and they're basically living on our dime, and the rest of us are paying taxes like good citizens that we are, and we just sustained a tax increase, which I've already talked about. And so I look at that type of situation, and I think we need to do more to get this down. I don't consider that we're in a bad year anymore. 2008, really bad. You know, I mean, we went into a pit nationally and internationally. But we're 5 years out now, and while we're not where we want to be, it's not nearly so bad, and I wonder, why aren't we looking at reducing it from 3 years to 2 years and get these slow pays up to speed? We can use this money.
And also, when the people who are good and pay timely, we do not charge them penalty those extra fees. I think Nancy wanted to.
Well, I was just, within the period that we are not yet foreclosing of that 17 million, is about $12 million.
Okay.
So we're looking then at in the taxes of about, 5 million, that some of which still falls in that category of they're in court action, they're in bankruptcy. There are limitations on those, so there's some of those that, and quite honestly, if you go look back at there are some older properties that have been stuck there for a while, and
Bankruptcy's
those
not
grow.
good.
But so that's, that $5 million pool is what we're going for in general now, and with
So-
each of these tax sales, one of the things we can, it's a little more difficult to talk about, although we say how many we start with at the beginning of the tax sale. One of the nice things that happens is as soon as you start sending those first letters,
They pay.
then you start getting payments. And along the way, right up till the day
day of.
before or day of,
Yeah.
we will have people pay before sale, which is wonderful. It is clearly motivational. I think one of the, while we're not ready yet to say that we want to try and shorten that foreclosure period, what the division is looking at is dedicating one of their collection people to working with people who are like 1 year out, so that instead of this building as long, trying to provide motivation short of foreclosure to get people in, help either payment plans. That's also some of what's in here that
Right.
shows as accounts receivable are people who are actually on payment plans as well.
And thank you and your staff for working on that issue. I mean, I have nothing no problem with anybody who's on a payment plan because they are truly making an effort to get it taken care of. It's the slow pays that I am really not happy with because we need that money so desperately in our budget. And that's why I think we need to look at, again, shortening it from 3 years to 2 years, because by the time you get up to the day of the foreclosure sale, what percentage of those people actually pay up? It's high, I think, right? 80, 90% of them? Just give me a swag here.
Yeah, that's okay.
Normally, let's put it this way. For this upcoming sale, we're starting with 1,000 properties. Prior, we've usually started with about 400, so we're trying to step up the pace here. I would tend to say when we had 400, we'd wind up with something like 80 for sale. All right, so you can look at 80%.
5% or so, no, 80. Yeah, what,
Yeah.
5%?
Yeah.
Don't pay. Say, this is the reason. Is it 25?
20, yeah.
80.
Yeah, 80 out of 400.
25.
20%.
20, whatever, close enough. We're dealing with, that's my point. If we were to shorten it from 3 years to 2 years, those are slow pays. Those are not people that need a payment plan. They're not in the bankruptcy system or litigation for inheritance or something like that, which is why I think we should shorten that from 3 years to 2 years and get the slow pays. They're the ones I want to kind of prod into doing this.
And thank you, I understand what you're saying. But I do want to make sure everyone understands that those people aren't getting to pay slow for free.
I understand.
They are being charged penalty and interest, and sometimes in significant amounts if they choose to be slow.
Right, and Nancy, and I understand that it's not free, and when we do a foreclosure, we get 100% of everything back, plus they've had to pay all the interest and penalties and whatever. I would rather get the money in the bank a year earlier, because that means it goes into the budget. So, will you or will you not support shortening this from 3 years to 2 years and get the slow pays approximately $4 million worth more into our coffers?
Madam Chair,
Yes.
just point of order. That was the bill you introduced the last time, but what happened
Yes.
to it, or?
Oh, they wouldn't support it.
Okay,
But
well, no, yeah,
I
but
think it's really been, can I make a
Yeah,
statement? Refer to the Real Property Tax
Okay.
Task Force, where we're working together, and I just want, in however you respond, to be,
Yeah. So we need to be a little cautious.
I will be
of this.
cautious,
Thank you.
okay? In fact, I'm going to stop asking on that because of that situation that Margaret just brought up, but I'm not comfortable with our 3-year process. I think the people of this county need the money more in our budget. Okay, next thing that I have,
we have,
did you want something?
no, I'm not, I'm just, was trying to think.
Because of the 5 minutes.
Oh, I'm over 5 minutes? I yield.
Thank you. Councilmember Willie?
Thank you very much. What is the fund balance right now? And I think is it like 37 million or up from the previous estimate of 31 million?
Sorry, at June 30th, 2013, yes, it was roughly 37 million, of which we are budgeting 24.8 million roughly in the budget for fiscal year 15.
Okay.
We will not, this is the money we're budgeting, the 24.8 million, is really what is going to be taken from the fund balance we achieve at June 30th, 2014.
Okay.
Of which there are some factors, many factors that go into that. So, it's not a exact science. We're still monitoring that as we get closer to the Mesa middle.
Right. Okay, so that would, I think at one point, and this was a number of years ago, I think Nancy said we at least want to keep whatever fund balance around 14, 15 million, and that may vary, but.
I think it wasn't so much a dollar amount as a percentage.
Okay.
With the budget stabilization fund and the fund balance, we would like to maintain 15% of our budgeted expenditures of the general fund to be in compliance with GFOA's, Government Finance Officers Associations, one of their best practices, so that when an economic recession hits or a disaster hits, we have that found financial stability to fall back on.
And so, what would that number be based on your current projected budget? Approximately.
Roughly $50 million, and we have roughly $5 million, I think, in the Budget Stabilization Fund.
Okay. And in terms of I think we're right now looking at being short 8.6 million for the Gatsby, all of the retirement and pensions.
Yes, roughly, and we won't know that number until we get the actuarial report.
Okay. And are you all, is there an objective from your department to try to make that payment and somehow work that out? Or is this sort of where you feel comfortable leaving that amount?
I'm sorry, which amount?
On the 8.6 million, in other words, that was about what we
on
were
Gatsby, I'm
short.
sorry. Okay, that's what we're comfortable with given the current revenues and the other projected expenditures within the budget, yes.
And last year we raised the real property tax rate, and maybe this is in there, but do you have a ballpark of what that increase, what amount we netted by doing that increase? Is that possible, or do you?
I believe last year when we were talking about it and we had those values, last year's values and the different rates, we had that information. I don't have that with me here today.
Okay.
Because at this point now the difference we're looking at is related to additional construction and valuation increase.
And in terms of filling positions, I know it came up last year, which ones unfilled, unfunded, and in particular the ag, and sort of where are we in terms of those positions? I know I did hear some in terms of the real property tax task force, but just for general information, I think that is important.
No, we're happy to say both of our valuation analyst positions either are filled or are in the process of being filled. I forget the exact date of the paperwork.
Right. And that was just sort of, that was a priority for our group, and I think that's really important. Of the monies that are all these Gatsby's amount, I mean, is there any way the county can somewhat contain? I think you said those numbers. I mean, you said that, like, of what you'll pay, it's approximately half, 15 million is for retirement.
Retirees. Yeah, over 16 million would be for retirees in the coming year. The whole idea of the Employee Union Trust Fund, the organization that does statewide the health benefits, was to keep the cost as low as possible by going together, I guess, as a larger pool. So all the state employees, the other counties are all part of that pool. I think they do their best to keep the cost down. I believe there's limits. Human Resources might be able to better answer, but there is like a cap each year on the amount we pay for the retirees. So they have put provisions in place to try to limit the rates from going up excessively. In addition, I believe the state legislature has taken action for employees hired after July 1st, 2011 or 12, where their retirement benefits and post-employment benefits are reduced compared to current employees as well. So when that kind of catches up eventually, there will be lower costs in the future as well.
Okay, and that pre-2011, there's, unless it's decided to tax those benefits, there's probably no way to reduce.
Right, they would have to
amount.
decide to impact current retirees and current employees, and so far they have not made that decision.
Okay, a couple things particular I mean, let me just say, in terms of the amount that we're collecting on real property taxes, that considering Fresh Onishi and I are on the committee, and that's something that we all are looking at, how to make that fairer. And as you recall, I actually did a resolution. How can we reduce the overall amount that we're charging or attempting to charge for real property taxes? And my hope is, let's do the task force and see where we come out once we review and what abuses exist and see if we can address the most critical problems. So I just want to bring up that resolution I did. I'm sort of looking at it first, where are we when we come out with the real property tax task force, and then look at what questions we need to further address, or what can we do with the real property taxes. I did, just in terms of a couple specific things to my district, I noticed like the prosecutor's office is in the same building as the Waimea office, and you all negotiated a multi-year contract there. Whereas for the Waimea Council office, we're doing that each year on a year-to-year basis. And I just, raised that in terms of what we might do in terms of savings if it wasn't just year to year. So I'm not asking for an answer, but I think, how can we take a look at that? And then, Leslie, in terms of the open space and your involvement in that, I'm not sure if you're aware, but for example, this week we had discussions about this banyan tree property, and I'll finish with this question. And it's something that the community's overwhelming working for, and we've been passing that here. But the property owners are sort of urgent. If you want it, that's great, but if not, we need to move on. And I just want to ask you through this process to please do what you can. I'm not saying exactly what the answer is, and hopefully it's positive. It's relative to all the other properties, a very small amount, and that you would just ask you another burden on your staff to help us really expedite that decision-making process. Thank you very much. I yield.
Thank you. Councilmember Elegant.
Thank you, Madam Chair. Good morning.
Good morning.
I do want to share my opinion about delinquents. The thing about that is, I look at it as in where if we were trying to focus on that, and I know you are already doing the necessary process to try and get those delinquent funds that should be in the coffers. I look at it as in trying to get money from people who don't normally have it. And that's why you have the payment plan, and you're accommodating their needs. And I look at it as in trying to get, because from what I was putting down, I think we're getting around 232 million for revenue for property taxes. And someone said it was 17 million of delinquent. Is that what it is?
Yes.
Well,
That's
when
correct.
I did the math, that's 7% of the revenue. And one thing that I look at is, it's like getting $700 from 7 people. Instead, what we could do is try to improve the valuations. Instead, trying to get $7 from 700 people, and try to increase property values up in our county, instead of trying to milk the delinquent process. And one of the things about those accounts is that you have to go through corporation counsel. That's an expense that's also have to be added in to try to get that money. And we're paying a lot of money for our lawyers to even go through that process and that paperwork. So I'd rather invest our revenues into increasing property values in the island of Hawaii rather than trying to push more pressure on those delinquents. But that's my opinion. I do want to congratulate you on your, believe it is through the Government Finance Officers Association, your certification of achievement. You got that this year.
Yes.
And
Thank you. Thank you, Kay.
that's a wonderful work.
There's a lot of work that goes into that.
I love that book, and I read that book religiously. I do want to ask you some questions regarding how to improve. I know training is one of the areas that I feel needs to be emphasized. And when I'm reading your program review, it looked like you did one training for the personnel. Could you please explain a little bit more about that?
Do you have your program budget? For the personnel, are you talking about the quarterly, the county-wide training that we do?
County-wide training, the
Yeah.
first thing that you read out of the program review.
Right.
It says, Administration 1, one training session was conducted to date, and I looked
Right.
at the previous report. It also was one training session was conducted. Is that the same training?
At our annual budget kickoff meeting, we kind of bring people up to date on different things happening in procurement and accounting, county-wide policies. But in addition to those county-wide trainings where we have for all the accounting personnel, we also go out to each department as needed and as requested. So that might be a little bit misleading because
Yeah,
we actually do meet with
wanna
many of
add
the
that,
departments.
Various other accounting, actually variety of one-on-one training with many departments is also mentioned on that. But it says that conduct 3 training sessions for the county financial personnel and county-wide. So right now what I'm seeing is that you've met 1 out of the 3. Could you explain a little bit
I guess
more
what I was
about
trying to kind of
that?
mention, like when we're doing the budget kickoff, we're also doing procurement at the same time and accounting at the same time. So we've kind of incorporated them into one session the last few times. But our goal is always to, add training and improve as much as we can. This year we actually did do
And
additional
what's the
training.
goal? What's the goal of those training? What are you emphasizing on the training on?
Well, one of the things I would say is that the particular training that's being discussed in this section under administration is a very broad level training and where we get to bring up related to our accounts payable, certain items we would like people, not necessarily anything new, but either this is the process or these are our recommendations to help your processing go better. They're
counties deal with their finance department and their programs. Has that reach been made?
We don't always go through NACO. We tend to go through more GFOA, just
okay.
because it's Government Finance Officers Association.
That makes a lot of sense.
But yeah, whatever contacts we can make, we do discuss. We also do realize that we're different than a lot of the other counties on the mainland.
Definitely.
We don't have city government, so we reach out and connect to whoever we can.
Now, the GFOA, do they have annual conferences?
They do, yes.
And do you attend those?
When we can afford it, yes.
So our budget has not give you guys a chance to go?
Well, in the last couple of years, we have not sent someone to those conferences, but I believe we've discussed it for this year. I'm not sure yet. We're sending someone.
The people who did attend those conferences, is it rewarding?
Yes.
Yeah, it's very rewarding. I went a couple of years ago, and not only do you learn about the new GASB statements and
I think we should send more
nerdy people things, but you do make contacts with other people and learn
And
what they're doing.
How much? If we were to let's say, think about your essential personnel. If we were to send people to that conference, who would it be? And I'm not saying who would it be. Let me ask you this. Well, how much money should we allocate to make that happen, to send your initial essential personnel to that conference?
I can look and see how much it might be, but in general, we would probably send one person that would come back and train others on what they've
Perfect.
learned. Yeah.
Please get back at me with that information. I know my time's up. I have actually 100 questions to ask you, but I only got to that, so sorry.
And I would encourage council members to, even if they're done with their presentation, to individually go to you, because I'm just kind of watching the time, and we need to be back here at 1:30. That means we need to leave for lunch no later than 12:30 if we want to have an hour lunch, which I think we should. So I just want to be conscious of that, because we do have the planning department following. So Council Member Onishi.
Thank you, Madam Chair. Nancy, either you or Deanna can mention, in this proposed budget right now, it's not the TAT, if the cap is released, it's not included in this budget, correct?
That's correct.
Okay, thank you. And then the last thing I wanted to say is just that what Mr. Iligan was mentioning, NACO does offer a service where for procurement, for RFPs, that if the county wants to go and say, like for example, the waste or energy, we send them the information and then they'll do the research for the counties. Okay, so, but I'll send that to you folks, that information. Okay.
Thank you.
Yeah, thank you.
Thank you. Anyone else? Oh, Council Member Eoff.
Thank you. And thank you for all the hard work that you put into balancing this budget, and to all of your staff. I have a question. When you mentioned, or we've talked a little bit about some things coming through from the Real Property Task Force, either recommendations or information. Is any of that information going to be useful to us for this budget, or is that going to be in a future year?
I would say that any legislative changes that might be recommended will not impact this upcoming budget. There are a number of recommendations in the study, many of which we were already working on or initiated at the time of the study, and those are things that don't require legislative changes. That's departmental, procedural, implementation, and I would say that we worked on a number of those, including an increased emphasis on enforcement of the rules that go along with, for instance, certain dedication programs, or like our special ag programs or something like that, which have an impact, but not something that's a measurable impact that we don't know what will come out of that. We were talking about pictometry. That allows us, that's a tool for us to recognize not only structures, but what activity, if there's supposed to be agricultural activity going on down here, is that what it looks like? And we wouldn't make any change just we are sort of stepping that effort up and targeting staff in certain areas.
And you'll be here throughout the next couple of days if other questions come to us that way through.
Yes.
Okay, thank you.
Thank you. Councilmember Floyd? I'll try to be really quick about this question, and then I want to get our risk manager to come talk to us a little bit. Earlier we had a fire commissioner come up and talk about other municipalities who buy their fire engines and trucks and all of those things, huge dollar items, via CIP instead of the operations budget. And those municipalities keep their operations budget for salary and wages and overtime and other things. This is something that intrigues me, because I would love to see this happen. I know there's a reason in this county we don't. I forget what it is. I'd like you to remind me. And if it's a law, is it a county law or a state law?
Some of it is just best accounting practices and appropriateness of use. And Equipment is not an appropriate use of the capital projects fund, as well as it's not an appropriate use of bond money, which is typically how we fund our capital project fund expenditures. And we have had discussions with bond counsel on this as well, because we are aware that some other jurisdictions do it. But we're also smaller, and it would really be inappropriate, and we would be violating state law to do it that way.
Oh, well, that,
And
there's the
IRS
answer.
rules,
It's
yeah.
a state law violation, it's over with.
HRS and IRS, so.
Okay, so it's a violation of everything we can think of, but other municipalities are doing it anyway.
That's their choice.
Oh, well.
Or their risk.
Go ahead, Nancy.
Well, I just wanted to point out that what we do take advantage of, though, that's similar to bond money is financing plans. That, you know, our lease financing, that would come to you and ask for the multi-year financing, and we've been doing, we've greatly increased over some of the prior tough years that I can recall, our purchase of equipment that's badly needed, I recognize, but what has allowed us to do that is doing financing,
Right.
and rates, at least up to this point, have been very good.
Very favorable. And even though we're paying for the lease-to-own situation, the lease rate, the finance rate for that, as you say, is very low.
It's actually lower than our bond rate,
Yeah,
so
it's
it's really
really
good.
low. Yeah. Which is one thing that's kind of kept me from jumping up and down, because I prefer to buy outright and just get it over with. And what the gentleman said, Mr. Palouse said, was intriguing. But if it's a violation of multiple types of laws, then I'm not interested. So the financing sounds great. I would like to get Mr. Knowles up here, because I would like him very quickly to explain the fact that we are doing insurance procurement and getting discounts, because he's such a clever person to do this. Because my understanding is we are self-insured, but obviously there are some things we're going out into the commercial market and getting the insurance through the commercial market. Mr. Knowles, would you identify yourself in the microphone and then explain a little bit more maybe about what we self-insure for and what we're going out to the commercial insurance market to get insurance for?
I'd be glad to. My name is Scott Knowles, and I'm the Risk Management Officer for...
Okay, Scott, hold the microphone really close to you.
Okay.
Okay, thank you, that's much better.
Okay. My name is Scott Knowles. I'm the Risk Management Officer for the County of Hawaii and have been since November of 2006. For the most part, we are self-insured for liability purposes, but there are some exposures in a variety of activities and responsibilities that the county has, that to be self-insured in those industries and those activities, one catastrophic loss could essentially impact not only the budget, but financial resources and that of the county. And I'll give you some examples. For the police subsidy program, we have approximately 400 police officers who operate subsidy vehicles. Those subsidy vehicles we pay a liability insurance for in the event that they are involved in an accident resulting in injury or damage to a third person. Since police officers are on the road essentially 24/7 because they're on call when they're not on their shift, that liability insurance, which is $100, $300, is available on their vehicle. We do have a fleet vehicle policy, or a fleet vehicle property damage policy, and that's for our 30 fleet vehicles. That's we have 15 SUVs, we have 15 Crown Victorias. We're self-insured for liability with those, but for property damage, because of the value of those vehicles, they've been fitted with a number of additional components in that. We maintain a property coverage in the event that they are damaged in any way, and it's been beneficial because we've lost a couple of those and been able to recover. Going back to the subsidy programs, we do not cover property damage. We only cover liability, and that protects the county. So if a subsidy vehicle is damaged, the police officer maintains a property policy through SHOPO. So therefore, the vehicle is entirely covered, except the police officer bears the expense of purchasing a property damage on their vehicle because it is their vehicle, and they maintain that at their expense. Where if they're involved in any accident that would involve damage to the public, we cover that, and we've been very successful. I know in 2006, when I came on board, we were paying for less vehicles. I think it was about 320 vehicles at that time. We were paying almost $600,000 a year. Currently, last year, for 400 vehicles, we paid $99,000. So there was a reduction of $400,000 or $500,000 a year. I can't take credit for that totally, or even partially. I think we've had some success in the reduction of accidents, but I also brought a competitive process into the bidding. I think previously it was handled by purchasing, and quite frankly, purchasing is overwhelmed with what they have to do and may not have been able to pay as much attention to the procurement process for, at least for insurance. And so by getting the competitive process involved in that, we've been able to successfully get a bidding process going on, and we open it up to all brokers. So it's not as if we select one, but we do take the lowest quote. And so that's an example. A couple other liability policies are the helicopter liability policy for fire, because in the event of an accident with a helicopter, there's going to be a catastrophic result. We also do it for our fire EMT technicians, because they're providing medical treatment to the injured throughout the island. And quite frankly, if they make a mistake, it's a malpractice coverage for those people. And so based on those, we have liability coverages. One other liability coverage we have is for mass transit. And the reason that we do for mass transit, even though we contract out to the drivers of mass transit, they have their own insurance, but we have the insurance on the vehicle, and that's the primary. So when you have a busload of people, if they're involved in an accident, we need to make sure that we have sufficient liability coverage to take care of that. They're a large vehicle. If they strike something, we have protection. Many times, if a vehicle were to strike a bus, the passengers may get hurt. As you know, under Hawaii, you're required to have PIP coverage, which provides medical benefits to passengers in vehicles. Even though we don't have any fault for the accident, we still have to have insurance to cover medical for our passengers. So those are the four major liability policies. We also have property coverage, covering about $370 million worth of properties around the island. And it benefited us as a result of the October 15th, 2006 earthquake. We made a fairly substantial recovery of a lot of our damages. So in those instances, we were not self-insured.
I would like to say that I've worked with Scott a little bit over the years that he's been here and I've been here. Mm-hmm. If you think you've got an exposure situation in your district, I actually recommend that you contact Mr. Knowles and get him out there to take a look at it. He has been instrumental in getting some liability issues resolved in my district that I was not able to convince anybody that we had a problem. Now, that doesn't mean when he comes out he's going to agree with what you think. He'll come out and the first thing he says is, by the way, what you think doesn't make any difference at all. But he's very kind about it. And you're very humble. I think you've done a fabulous job over the years you've been in this position. You've saved us unbelievable millions of dollars, I'm sure. I hope you live forever in North Carolina. Thank you. Nancy, you've done a good job picking this guy. Thank you.
And just to follow up, and thank you, Councilperson. we generally, or I generally respond to, I mean, my eyes aren't everywhere, but I generally respond to hearing either as a result of an accident, a result of an employee complaint or not a complaint, concern regarding a condition, or the public will call regarding concerns. So if you have concerns, that it's only a phone call away. We try to, and many times safety also accompanies me. And we go and take a look with different eyes to try to find out what the concerns are and what they can be remedied. So it's worthwhile.
Thank you very much. Okay, so, thank you. Okay. I just want to be real conscious of our time because I still have the planning department, but, Mr. Elegant?
Thank you, Madam Chair. Don't worry, I'll make this one quick. Director, there was an audit that was done recently with Acuity, I can't say the name. They came up and they talked about, the reason why I'm bringing this up is because as I listened to all the council members, this one wasn't brought up. The information technology policies and procedures regarding financials. What's your plan in meeting their requirement? Because they keep on mentioning this in the report.
It's actually the Department of Information Systems or Technology that's been working on those policies, and pretty much it's just the process of documenting what we do already. So a lot of the things that they mentioned, we have those procedures in place, and it's just documenting what we actually do. And so IT is working on them as they have time, and they've gone through some personnel changes as well. So they are working on it, and they're in progress, I believe. So
I see. Because finance does all the financial process here, and I was curious. I thought that maybe you might have a suggestion to what software or what policy, or because what I'm actually trying to understand, maybe I don't understand it yet, is that there aren't policies in place. Is it from each department, or is it specifically for informational technology, that department? See, that's the part I'm not sure why that audit keeps coming up, or that report.
they look at, when they come to do the audit, they don't specifically audit the Department of Information and Technology. They audit the financial system. However, they go out to IT to look at the various procedures and policies in place. So when we need to make changes to user access, for example, we have to send an email or document it in a form, and then they take care of that, and they make sure that all of those forms are there and it was properly authorized, or making sure that terminated employees are no longer have access to the system. What they would like us to do is that while we have the Eden system that we use for our financial accounting system, real property tax has the IAS system, other departments have other systems. They want us to have a county-wide policy that we review user access on a regular basis. And we do that. It's just not in a policy per se.
And you're saying that IT would be the one creating that policy?
Most of the policies that come down regarding information technology use have come out of that department.
Okay, so it's not technically each department creating that policy?
No, we want a more uniform policy of the best practices and the right way to do things.
So has there been a meeting, or I'm sure there has, where all the different departments had come up and talked to IT and figured out how they're gonna unify that policy?
Well, Deanna may have more to add. I would say there have been conversations, there's certainly been work towards this. In some cases, there may be, depending on the software someone's using, there may be, they would like, complex passwords, for instance, that you change regularly, and some older systems that we're still using for various purposes may not be able to handle that complexity. And so that's a limitation. It doesn't mean there can't be workarounds to help with that, but in terms of working, I wouldn't say they've had a work group on developing this comprehensive policy, but I think they've gotten to know the departments quite well through the audit process and are working on something. And then as certain systems have been upgraded, it provides that capability, so then they can meet that standard that we would like to have, say, for the complexity in your house or something that triggers and forces you to change it every 90 days.
Okay, so I guess I can't really ask you when this would be estimated to finish. I'll talk to IT when we come before us.
I guess I would say I believe there's already been, while the comment may still be there, it's not all of the same items, and there has been progress made, I think, each year.
Yeah, the list is getting shorter and shorter, so they've been working on it as they've had time, and like I said, they've gone through a lot of personnel changes there as well, so.
That's definitely true. And I was just trying to make sure that this is getting done because it keeps showing up on our reports, and I'd rather not it show up on our reports.
I agree.
Thank you.
Right, and water supply is mixed in that comment as well, so.
Thank you. Thank you very much, Finance Department. And if there are any more questions, I'm sure council members will contact you. We'll be here.
Right, we'll be here, and also, but we also always welcome direct contact from any of you if you have some questions that you didn't get a chance to ask today here.
Thank you very much. Now that, council members, we have approximately 20 minutes for our planning department. So I'm going to get started right away if you